What is up, good people? Jungle Link here. Hope you're doing well. Gonna take a little break here on this lazy Sunday afternoon for me. Been doing yard work all day. Thought it'd be nice to sit back, chat a little bit about crypto and the news. We got some good stories here. BlackRock with still strong demand for their ETF. That product continues to chug along. Good to see. We're going to talk about in the early days of DeFi and the XRP ledger. What type of yield can we actually plan on making? Can we even calculate that at this point? Big court date coming up between Ripple and the SEC. We've talked about it, but we'll discuss a little further. And then there's some really scary ideas, draconian plans by the IRS. It's not just the SEC we have to worry about. Now the IRS is coming up with some crazy things here in the early days regarding cryptocurrencies, how you can protect yourself. We'll discuss here. Now, BlackRock, we see that their Bitcoin ETF has hit 69 days of inflows on 420 halving day. And, I'm glad to see that because I wasn't sure once we got past that very bullish event as the FOMO and the novelty subsided, would we continue to see demand for this product? And so far, demand has been strong. Again, with the Bitcoin ETF seeing inflows for 69 days, after the launch of that product. It's good to see. Now, one of the big losers of Bitcoin ETFs was Grayscale. They refused to bring those fees down, so now they are launching their mini Bitcoin ETF. It's a side offering to their GBTC, their main ETF offering with all of the Bitcoin they hold there. And they're going to have vastly cheaper fees, at least hypothetically. And one of the analysts here is telling us Grayscale's investment has declared its upcoming mini version of the Grayscale Bitcoin exchange traded fund to be almost a tenth cheaper than the current fees of their main fund, making it the most cost-effective option among the approved spot Bitcoin ETFs. But the analyst is telling us this is just a pro forma financial and it's hypothetical. So we don't know if those fees will really stay that low. But the good news is they had to pick a number for this and they knew people would be watching, so they picked 15 bips. Is this going to make a difference? Probably not, because you've already seen Grayscale and Fidelity jump up here and take a big portion of the market. While the fees might be low, do you really want to trade an illiquid and mini version of a ETF? Probably not, at least for your big money. It's probably not going to be a really popular product. Grayscale could have taken a huge part of this market just because they've been around forever. They held so much Bitcoin. They were the household name, and I think they really messed up here. And truth be told, they probably had no other option here because they need those fees. And a lot of people are trapped in there because they're sitting on huge gains and they might not want to cash out right now, and they understand this, so they're just milking it for all they can, to be honest, because you have all those subsidiary companies that are connected that need the income. I think that's just what we're seeing here. But I think long-term Grayscale loses because of their inability to be competitive, and I don't see this mini ETF offering changing much there. We see post-Bitcoin halving here that we've seen a giant surge in transaction fees, and they're really driven by runes. We see Rune Protocol set fees surging as users rush to etch new digital tokens. And there's one thing I want to correct with this. A lot of times, just talking shorthand, we're like, "Oh, the miners' income is being cut in half," and it's just it's just the subsidy that's being cut in half. But they're still getting fees, and sometimes those fees can go up. So it is not accurate to say that necessarily miners are only getting half the money. Right now, you have that subsidy and an awful lot of fees going as well. So it's more complicated than sometimes we discuss. If you want to know the intricate details, go over to Bitcoin University either yesterday or the day before. He has a pretty in-depth video about that. I think he is quite knowledgeable in the subject. But just understand, a lot of us talk about the cutting of the supply and the fees. And again, there's a lot more, like with anything in blockchain, to the story than just, that quick shorthand talk. Now, this is an interesting post here by DexFi. And they said the following after reading many different approaches from XRP Ledger developers. Here's an overview of what the estimated AMM APY is, essentially. And then they give the warning. First of all, it's important to understand no matter how much data we use, we're going to be wrong. Why is that? Why can't you say, hey, if you use these pools, this is what you're going to earn? And they explain the market will behave differently next year than it did in the last 24 hours, 7 days, 30 days, whatever amount of time that you want to take for your data. things are going to change drastically. Trading volume, pull size, trading fees, auction demand, all of this is constantly changing, and so will your APY, of course, over the long term. Even the best scientific approach does not mean we are anywhere close to the truth. In order to come close to the truth, in my opinion, that the APY will deliver. Right now, they are composing their estimates when you're looking and using their services on an extrapolation of fees earned, market averages, and caps. So just understand this when you are looking at that chart and you're trying to figure out how much you're going to earn. It's just a wild guess, an approximation that's based on past historical data. It's not necessarily going to be the truth. And here on DexFi, they say, personally, I've never seen unincentivized liquidity pools that generated close to or greater than 10% over the course of an entire year. And that's why I also take market averages, caps into account to a great extent. So anyway, just understand that when you are seeing those stated rates, this will be with anything. There's a lot of moving parts here, and there's no way to know for sure what you will be earning. We've talked about this extensively, but we got a big upcoming court case here, Ripple versus the SEC. Ripple gearing up to file pivotal briefings in the SEC lawsuit. And again, this is where they're going to attack that ridiculous $2 billion ask by the SEC. And what's most interesting, I think we'll get a lot more data here, because they're going to probably tell us, look, this amount of transactions took place overseas. We don't know that data right now. And, we're going to see their basis for trying to whittle that number down as low as possible. I think once we see that, we'll know, how strong is the SEC's case here. And again, even the most people that are against crypto and for the SEC, like Mark Fagel, he doesn't think they're going to get anywhere close to $2 billion. I think that's kind of consensus here, but it could be quite large. And I think this filing by Ripple will give us a good idea of how large that may be. Now, this is what I was talking about with the IRS. They have this new proposed IRS form 1099-DA for crypto transaction reporting. Man, look at this freaking thing. It's hard to read because they stamp not for filing right through where you want to read, but we're looking at kiosk operators. I don't use that, but I guess if you use a kiosk, they're going to have to 1099 you. Digital asset payment processors, hosted wallet providers. So that makes sense. But look at this. Unhosted wallet providers. What does that mean? Who are they expecting to 1099 someone? Well, an unhosted wallet provider is self-custody. Essentially, they would want probably, I assume, Ledger and Trezor and, these companies to KYC you in some manner and then track all that data. And then from all your transactions, like if you're doing swaps, I'm sure MetaMask would also be included in here. If you're using decentralized exchanges, whatever you're doing, they want to know about it, and they're going to try to get these unhosted wallet providers here to gather all this information and send it in. Like, what a ridiculous and unbelievable process. And, they get in here, they want digital asset addresses, a number of units, and all sorts of stuff here. Jake Travinsky says, bad news, despite years of industry engagement with the IRS explaining why unhosted wallets can't be brokers. The message has somehow not landed. Good news, rules that make literally no sense rarely survive scrutiny of the courts. And the great news is they've already filed the lawsuit. So we'll have to see how this expands. But no doubt, if this holds up and ends up being a requirement, all your big wallet providers, they're going to have to KYC you and start issuing this out and collecting all that private data on you, which is the whole reason to use a self-custody wallet. So we really have to dig into the various ways we can hold our funds and generally be in full control of stuff. And it's not that you want to, cheat the tax system. Always report anything, your taxable income, and do things properly. Sleeping better at night is most important. But it doesn't mean that I want to give all this info to Ledger and have them track every move I do and, report all this information. No one wants that. This is the whole reason why we are using cryptocurrencies. So I'll try to bring some experts on here, tell you what I know. But you got to be ready to pivot to using things other than the very convenient things like Ledger and Trezor and some of these other big wallets. It's not convenient, but you have to be ready to do this because, again, this goes against everything that crypto is about. Let me know down below what you think. If Trezor wants to collect all this data on you and file all these reports, are you going to continue to use it? Ledger would probably be the first one to jump through the door to do this. And there's just going to be a lot more action in this area. It makes sense. There's big money here. The taxing authorities, they're not going to trust people to be honest, even though you should be. It's better for you long term. So they want to track you. But again, that's a slippery slope. That's the whole reason we're in this industry. We don't want to be tracked. We don't want you in our privacy. We can be sensible adults here and do the things that we are supposed to legally without having Big Brother watching every single little move we make. Again, let me know down below what you think about this and if that is something you're okay with. I thought this was a great correspondent by Attorney Bill and also Mikkel here. We'll read through what he says. So many indicators for a dramatic XRP price rise, but it just can't stay above 65 cents. A lot of people are saying, well, it must be Ripple dumping on the market. Of course, these are all very easy solutions here. And I think Mikkel has a great answer here. You're hyper-focused on noise. That doesn't matter in the long run. It's like complaining in 16 the price couldn't hold above 0.5 of a cent when it fell to 0.3 of a cent. In the long run, that noise will be rendered obsolete, and all the time obsessing over it will be trivial. And I think he's absolutely right. There's a lot of moving parts to markets, and it always seems like the price should absolutely go up because of these, very novel reasons and interesting reasons, and the price should go down at other times, and it just doesn't work like that. I think over the long run is how you have to handle things, and you have to really assess the data. And no doubt, the last bull run XRP underperformed. No one's going to argue that, so you have to ask the reasons why. And there's never one answer either. It's not just the SEC lawsuit. It's a lot of things. You have to look at it and say, well, are these things that I think affected us? Are they resolved? Are they getting better? Are we likely to do better in the future? And in my mind, yes, I think XRP will do better in this upcoming bull run for a whole host of reasons, some connected to the lawsuit, some not, than what we saw in the past. And then you have to see it play out. Again, you don't know until you see a really long period of time. You go through those full growth cycles, and then at the end of the day, you tally up your gains and your losses and see what works and what did not. And if something is holding 65 cents at the current moment isn't really relevant. Really like that reply by Mikkel. And again, time settles all arguments. We will see how everything plays out this next time around. Last thing, I will point you to a new video I launched today. It's talking about XRP DeFi and the 4 drivers of blockchain growth. And in this video, I'm talking a little bit about how your big 3, your holy trinity, Bitcoin, Ethereum, and XRP, they've all kind of decided that you're not going to be able to do everything on the main chain, and we need to build out in modular fashion. It's really interesting how this has converged all at one time, and some of that is due to the success that Ethereum has had. Now, there's one thing that I did not talk about in this video, and it's, you notice I call it the holy trinity of crypto. They're 3 of the oldest blockchains. They all focus on very important areas like Bitcoin being sound money, Ethereum being programmability, and XRP being fast, efficient, and cheap payments, settlements, things like this. I think these are 3 areas of blockchain growth and adoption that are just foundational. And so when you think about, well, the XRP ledger spinning up side chains and scaling solutions to do things like smart contracts and things you can't do on the main chain, well, you might see between these 3, which I think is actually most sensible, is that since these are your pillars, instead of trying to spin up, brand new chains that mimic their capability, I think long-term you'll see the convergence where all 3 chains are linked together and leveraged for their individual strengths, and each will complement each other. That's actually how I see this playing out. Again, I've talked about this, that doesn't make a whole lot of sense unless there's something really specific you want to do around like privacy or some other feature that you can't do with Ethereum. It doesn't make sense to launch a brand new EVM sidechain next to the XRP ledger and just say, well, it's built for XRP, therefore it somehow interacts better. Like, you'd be better to pipe over right into the smart contract blockchain that has all the value, that has all the building, that has all the capability, and just do your smart contract stuff there, and then, link over for XRP for all the advantages and settlement and speed and things like that. I think long term that makes the most sense, and I think that's what we'll see is this linking. That's why I a lot of times call it the holy trinity of crypto, linking these blockchains together and many others. Again, it's a multi-chain future, and sometimes we see them as adversaries and competitors, and so we want to build something like them, but not them, because somehow that would be more XRP or more Ethereum. And I think a lot of times just jump to the chase and leverage the chains that do certain things best. Anyway, I didn't say that in that video. If you're interested, it'll pop up here shortly. Link down below. Let me know what you think as always. Please like, please subscribe. The revolution will be televised right here on Jungle Link.